Where tax is zero, where 60%, where is the highest and lowest tax in the world? Hello, friends. A man who was fond of traveling the world one day thought that he would live in a country where he would not have to pay taxes on his hard earned money. He started his research and was surprised to know that there are many countries in the world where people do not need to pay income tax. On the other hand, there are some countries where the tax rate is more than 50%. Why is it so? How are some countries prosperous without taxes? And why do some countries collect heavy taxes from citizens? These questions make this topic even more interesting. Is this policy made only on the basis of economy, or are there any historical, political, and social reasons behind it? Today, we will discuss this topic in depth. But before that, if you are new to our channel, please don't forget to subscribe to the channel so that you will be the first to get our new video updates. So let's start today's discussion without any delay. Income tax is the main source of government income in many countries of the world. As for India, the income tax is determined according to the income of the people. Those who earn more pay more tax, while those who earn less pay less tax. But do you know that there are some countries where there is no provision of income tax? It is really interesting to know how these countries are running their economy and where they get the money to meet their government expenses. Do these countries have social welfare schemes? If so, how are they funded? The United Arab Emirates, UAE, tops this list. This country does not collect any personal income tax from its citizens. The main sources of government income are indirect tax, VAT, and income from the tourism sector. The economy of UAE is based on oil and tourism industry, due to which the citizens here are given complete relief from income tax. But this is only one aspect, because many people also question whether the dependence on oil in the future will be enough to continue this policy, or will the government have to adopt a new tax system. Bahrain is also a country where people do not have to pay income tax. Here, the government collects its revenue from indirect taxes and other charges instead of direct taxes. This strategy also proves to be very favorable for small businesses and startups and strengthens the country's economy. But is this model continuous in the long term? Governments in countries like Bahrain are considering other types of revenue schemes to maintain economic stability in the future. Kuwait is another major tax-free country where the government depends entirely on oil exports for its income. No income tax is charged here. The huge revenue from oil makes the government so powerful that it doesn't need taxes. Despite adopting this policy strategy, Kuwait remains a prosperous country at the global level. But a question also arises that when the oil resources are limited, what will be the economic policy of Kuwait in the future? Is the government planning alternative sources of income? Saudi Arabia has also exempted its citizens from the hassle of income tax. The main sources of government revenue are oil export and other indirect taxes. Due to this policy, citizens get tax relief and help the government to keep its economy strong. It is also worth considering that if the demand for oil decreases in the future, will Saudi Arabia's tax-free policy survive? Is the government planning to increase investment in tourism, technology, and other sectors? Even in the Bahamas, famous for tourism, income tax is not charged. The economy of this country is mainly dependent on the tourism industry, which generates income for the government. Similarly, Oman and Qatar are also among the countries where there is no income tax system. The prosperous economy of these countries is mainly driven by oil and gas exports, so that the government does not need to impose additional taxes. But do you know that income tax rates in some countries are more than 50%? In these countries, the tax system is progressive. That is, those who earn more have to pay more tax. These countries provide extensive social security schemes, health facilities, and public services from this tax. This policy provides more security to citizens, but is it beneficial for them? Do high tax rates have a negative effect on the income of citizens? Finland is one of the highest taxed countries in the world, with an income tax rate of 57%. Through this tax system, the government provides high quality living facilities to its citizens, such as free health services, pensions, and unemployment benefits. But the question is whether citizens are happy with this high tax system. Now, the question arises whether they benefit more from this policy or do they consider it an additional burden. Japan is also a country where higher tax rates are applicable. Here, the rate of income tax can be up to 56%. This tax system works on the policy of taking more tax from rich people and investing it in social welfare schemes. Now, the question is whether this policy has been successful in reducing economic inequality or is it benefiting only one class? Income tax in Denmark goes up to 55%, and it is used for health, education, and social security for citizens. But do high tax rates affect job creation? Does this policy benefit the citizens of the country in the long term? The impact of tax policies is not only on the income of citizens, but also on their lifestyle, social security, and economic stability. A country's tax system reflects its economic outlook, availability of resources, and social structure. Therefore, both low tax and high tax have their own characteristics and challenges. Governments adopt various strategies to maintain this balance so that they can protect the interests of their citizens and also promote economic development. According to a United Nations report in March last year, Finland was ranked first among the happiest countries in the world. According to the report, the reasons for the happiness of the people of Finland were social security, less corruption, good education, and health facilities, and trust in government institutions. Finally, it is important to understand that the tax system has a profound effect on the social and economic status of a country. No policy is perfect, and each country develops its own model according to its own resources and needs. It depends on the citizens what kind of system they prefer: personal financial freedom with low taxes or comprehensive social security with high taxes. If you like our content and want to make our efforts even stronger, you can support us through the QR code given in the video or the UPI ID given in the description. Your every small contribution is valuable to us and will inspire us to make even better and informative videos. Your support is our strength. Also, if this video taught you something new or you felt that this information should reach others as well, then do not forget to like and share the video. If you have any questions or suggestions in mind, then do let us know in the comments. We look forward to answering your every question and listening to suggestions. And yes, if you want to stay updated with our every new video in the future, then subscribe to the channel and press the bell icon so that you get every new information first. GRT Business always strives to give you accurate and reliable information. Our news is obtained from various news agencies, public opinion, and public sources. We try our best to verify every report, but we are not responsible for any dispute or error. Our sole aim is to provide you with accurate and reliable information.